Welcome, my name is Vishal Texanani. Today I'm speaking to Jake Klein, the Executive Chairman of Evolution Mining, and we're going to discuss the gold producer's first half results, what the company plans to do with its nearly debt-free balance sheet, and of course we're going to get Jake's take on where the gold market's at. Jake, so great to be here with you. How are you?
Morning, I'm good. Thanks for having me on.
No worries. So Jake, can you please reflect on Evolution's first half results? How did you feel about how the company performed?
I felt good. The results were in line with plan. We always knew that we'd have a better second half than first half. So the all-in sustaining costs were $928 an ounce, which is still amongst the world's lowest cost gold producers. And our guidance is for an $850 to $900 an ounce full year cost. So to get into the top end of that guidance at $900 or less, we need to have a much better second half, and we're confident of that.
Okay, that's great. So, and we'll touch on the all-in sustaining cost and your gold production 3-year outlook in a moment. But I wanted to talk to you about your balance sheet. Yeah. So you've been very aggressive with paying down debt. You nearly have a debt-free balance sheet, and if I think about what's happening in the gold market, M&A is a big theme. You have Newmont Mining, Barrick Gold, Rand Gold, so lots of activity there, and I wonder if there's an opportunity for you to be an acquirer, or could you be acquired, or is the focus capital returns?
I think what we're wanting to do is just deliver our business as a profitable, dividend-paying, cash-generative business. So just to give you some context around that in the last 3 years, we've repaid $700 million in debt. We've just declared our 12th consecutive dividend, 3.5 cents a share, fully franked, and we've repaid over those 12 consecutive dividends $350 million to shareholders, and we've built our cash balance up to $300 million. So we are demonstrating that through our portfolio, and we've changed our portfolio over the last few years. We've got a high-quality, cash-generative business. To me, the key in the gold sector is not losing focus. The mid-tier space is the one that's delivered the best returns to shareholders, and that's where Evolution intends to stay. So we've said 6 to 8 assets is the right number. We currently have 6. So there is space for more, but only if they improve the quality of our portfolio and they're accretive to our shareholders. And on that basis, we look at opportunities, but we're looking for things that really add value to our company.
Okay. You're going to be very, very selective with any potential takeover activity or buying stakes in other mines. So I guess until you kind of decide what you want to do there, is the focus going to be on just returning more capital to shareholders if there's nothing on your radar?
So we're making about $600 an ounce if you take our all-in costs and the current gold price $1,800 an ounce or $1,850 now, so $650 an ounce of cash for every ounce of gold we produce. So we have what I describe as 3 choices with what to do with that money, and ultimately it's shareholders' money. Sure. So we can invest in exploration and discovery, and we're spending $60 million on that to try and discover ounces, and we're being successful in that space, both replacing reserves and adding to our reserve and resource space. But that's a high risk endeavor, but very high return. The second thing we can do with that money is buy more ounces. Now we'd say, as I've just mentioned, we'll only do that if it improves the quality of the portfolio and is accretive. The third thing, which we should do, if we can't do the first or second effectively and accretively, is return it to shareholders. Okay. And that's where our business philosophy is at.
Thanks for that, Jake. So let's talk about your 3-year guidance. And if I look at the slide as part of your investor presentation, what I'm seeing is you're forecasting that you'll produce a bit less gold over the next 3 financial years, and the cost, the all-in sustaining cost, is going to increase, so less gold at a higher cost. How do you explain that to shareholders?
Well, I'd say that's a base case, because we put out our guidance on known things. We're looking to improve our business through a number of initiatives, efficiency improvements, optimizing our assets. So we'll be looking to bring those costs down. But what I'd explain to investors is that even at those costs, those slightly higher costs, 900 plus Australian dollars an ounce is the lowest cost production, close to the lowest cost production in the world. So we remain a very low cost producer in a great jurisdiction, Australia.
Okay. So those production forecasts, they have upside?
Yes, we'll be seeking to do that, but we have always sought to provide a guidance that we know we can deliver into. We have not missed guidance yet, and that's for eight years since Evolution was formed, and we're intending to deliver to guidance again.
Okay, so let's move on to what's been happening in the gold sector more broadly. It's been a fantastic couple of years, like you mentioned, especially for mid-tier miners. The gold price in Australian dollar terms is hovering at near record highs or at record highs. And there seems to be quite a few tailwinds for gold. So I'd love to learn from you what your thinking is around the macroeconomic factors that could perhaps drive gold higher, and what the risks are as well.
Yeah, look, I think there are a lot more investors looking at gold as a potential asset class that they'd like some exposure to now than there were a few years ago. Clearly there are political fractures globally that are creating some uncertainty, both in the geopolitical sphere and in the financial markets, which create uncertainty and cause people to look at gold. And that's happening. You're seeing that. The gold price in US dollars is now above $1,300 an ounce. Potential trade wars with China, volatility in stock markets, Brexit, are causing people some concern. Then in Australian dollar terms, of course, you've had the fall of the Australian dollar. So you've got a slightly a different scenario in Australia. Normally, the Australian dollar is very correlated to a rise in the gold price.
Right.
At the moment now you have a situation where the Australian dollar is weakening and the gold price is strengthening. As you said, gold is now close to $1,850 an ounce Australian. That's close to its all-time high.
Okay. And so what are the risks that some of these tailwinds could unwind?
Look, I think the risks are that stock markets boom again, that uncertainty is less, geopolitical uncertainty and fractures decline, and of course that's a good thing from a global peace perspective, but it doesn't seem likely at this point in time.
Okay. Jake, thank you so much for your time, for providing all these valuable insights to our community of Evolution Mining shareholders. Really appreciate it.
Thank you.
No worries. I hope you found this video informative. Now, please remember what we talked about today isn't investment advice. If you wish to look at Evolution Mining's shares or any other stock for that matter, it's really important that you do your research, and please consider seeking financial advice. My name is Vishal Texanani. I hope you enjoyed this video, and I'll see you next time.